Good morning to all of you. I think welcome to the full year 2017 analyst call. So we will discuss about the full year performance. So we are glad to take you through the numbers and also the performance of the company. So on the call along with me is Sanjeev, the Managing Director, Sanjeev Sharma, Managing Director of ABB India Ltd, and the local division managers, Subir Pal, Head of Robotics and Automation, and Madhav Demuri, Head of Industrial Automation, Pitambar Shivnani, Head of Power Grids, and C.P. Vyas, Head of Electrification Products, and my communication colleagues, right? And also I have with me Mr. Akilur Rahman, the Chief Technology Officer of ABB India. So over to you, Sanjeev, without wasting any time.
Thank you very much, Sridhar, and good morning to all of you. Thanks for joining in this call. I'll give a brief overview of how we see the market and ABB perspective of it, and then we'll go into sectoral insights, and we can take the questions around that later. As you are all aware, ABB has its focus in three distinct areas. One is utilities, second area is industries, third area is transportation and infrastructure. So that's where our core portfolio of products, services, and future technologies are focused on. So within that framework, if we look into 2017, it was really an eventful year for India as well as ABB. In India, we saw there were systemic changes in terms of demonetization effect playing through the system. Mid of the year, we had GST. Later on, we had some initiatives of bank recapitalization. We did see lower inflation, interest rates. There were distinct actions which were taken for NPA resolution, divestment, and also we saw strengthening currency in India. On ABB side, we continue to scan the opportunities in such an environment in India with our footprint that we have created over the last 60 years in terms of manufacturing services. And not only in India, we keep scanning the regional countries where the opportunities are connected with ABB India. So that has been our focus, and it has paid us well. And ABB took some strong initiatives in 2017 in terms of launching our digitalization focus called ABB Ability, where we have a very strong play in India, not only in terms of offering, but also co-creating solutions with some of the best-in-class customers in the country. And also, we acquired some leading companies in the area which really balances our portfolio. For example, B&R, it's an Austrian company which we acquired in mid of last year, which gives us a portfolio for factory automation and machine automation. And it also has a good and solid footprint here in India, and it will play into the value-added solutions to our customer base. Same way, you may have heard that ABB chose to acquire GE Industrial Solutions, which is under the process of acquiring, and mid of the year we will hear much more about it, the impact of it globally. But it definitely gives us a strong foothold in the electrification product space in United States and also in Europe and some impact in India. Now, we are very pleased to announce to you the ABB India results. We delivered a solid growth and balanced performance in 2017. And when I say balanced growth, just to give you some numbers, I think Sridhar will go into detailed numbers later on. In last quarter, we grew 44% in our orders. And of course, netting out a very large contract that we had in last quarter of 2017, which was the HVDC contract. So if you net that out, net of that we grew 44%. And if you take total 2017, we grew 19% in orders. We had a sustained base order momentum of plus 13%. Our revenues grew 5%. Profit grew 12% in 2017. So overall, all businesses, all divisions contributed positively with a lot of market as well as operational gains built into this performance. We have solid fundamentals, and again, Sridhar will talk a bit more about it. I'm very pleased to inform you we are a zero debt company with a very solid cash position, very good visibility with our solid order backlog, and this balances any slowing local markets or adjustments in the market sectors, because we have a very, very good loading for our operations going forward. Now, the new areas which are developing and which captures our mind share as well as our work is the digitalization opportunities. I don't know if you have been able to assess it properly, but this is one of the biggest opportunity for ABB to deliver very high value for our customers in utilities, industries, transportation and infrastructure. Because traditionally ABB has been supplying assets into the customer install base, and digitalization has three layers. One is IoT, you have then machine learning, capturing the data and doing something about it, and artificial intelligence layer on top of it, and in between creating strategies for the customer which really increases their operational efficiency, reliability, predictability and overall productivity of the system. So this is something which is really the sweet spot for us. It equally applies in all the segment and all the customer segments we are doing, and we are seeing a very good traction here in India, and we have a very good team which is a kind of a globally accredited team, very good skill base, which is helping the customers to get to the next level of journey. And I must say that the customers in India, they are as good as anywhere in the world. They're very aware and they're engaging very well with us. So we see a good momentum picking up here, and it is across the segments, across the sub-segments, be it at F&B, cement, oil and gas, steel, paints, power, etc. And we really draw a lot of satisfaction of having built a lot of projects of national importance. Last year, as we say, that we delivered projects right from Kashmir to Kerala. We helped build the Jammu and Kashmir Chanani Nashri tunnel, wherein you may be pleased to know that the technology that has gone into the Gotthard tunnel, which is the longest tunnel between Switzerland and Italy, is the same technology which has been deployed into this 30-kilometer tunnel. And this tunnel has the automated safety systems which use best of our drives, motors and software technologies to make travelers safe in the case of any emergencies. At the same time, we have projects like solar plant electrification. We have helped build the largest petrochemical company's energy management system, and it happens to be the largest energy management system deployed anywhere in the world. I think not many people know about it, but India has the largest installation of energy management system in an industrial plant, and we have delivered more than 10 gigawatt of cumulative wind and solar solutions into the marketplace. So we continue to invest in India. As of just 2 weeks back, we opened a new plant, second plant in Nashik, which will produce medium voltage products, cutting edge technology in GIS and other areas for domestic as well as export market. And it's an ultra modern plant. And also other information I'd like to give you is that yesterday we had the board meeting, and our past chairman Frank Duggan, who has taken a new position in Europe, resigned, and we have appointed the new chairman in J.C. Delare, and he is our new chairman as of yesterday, and he is also part of our board. And ABB India will be led under his supervision going forward. So that was a quick update about our view about the market and ABB perspective. And then on the sectoral side, starting with utilities, we do see decline in thermal power investments, but at the same time our portfolio is wide, both in terms of market diversity. So we have good export markets to balance it. So we saw good traction in export side in that area, which balanced what we had decline in Indian market. But at the same time, thermal is one power generation avenue. We have a solid solar market portfolio, hydropower market, petro portfolio, and retrofits. So I would say overall it balanced itself. And on the solar side, capacity addition continues despite falling tariffs, and we continue to make sure that the technology that we supply and the customers who buy, we are seen and we deliver very high quality inverters, and that's why we keep the highest market share, and I think we continue to serve the industry in a good way. Same way on the T&D, transmission and distribution focus, we see an outlay of 15,000 crores, plus 1% with focus on modernization and rural electrification. I can invite a quick comment from Pitambar Shivnani, our president for Power Grid Division. Pitambar, a quick comment from you on the T&D side.
Good morning, ladies and gentlemen. On T&D side, we have a proven track record of executing mega projects. We have commissioned world's largest HVDC multi-terminal 6,000 megawatt Agra project, and we have also commenced our execution on another HVDC multi-terminal, that is Raigarh-Pugalur 800 project. We have commissioned Champa substation, which is largest of its kind pooling substation for PGCIL, which has a normal operating capacity of 6,000 megawatt. We have engineering, manufacturing and service base, and in line with Government of India initiative Make in India, we have a huge manufacturing base and local manufacturing of technology intensive HVDC transformer hybrid switchgear and we are strengthening local expertise. Thank you, Sanjeev. Thanks.
Thank you, Pitambar. So continuing on the T&D, I think there's a lot of focus which is shifting into modernization and upgradation by states. And I think earlier it used to be very PGCIL centric, but now I think it is moving to states, and we are capturing those opportunities in the change of channel and focus. On the industry side, we see the IIP growth led by niche segments. Private sector's investments and capacity utilization is still muted because of dual balance sheet problems. I think it will resolve itself sooner or later, but we see that we still have a sweet spot here because our focus in industries is to increase the productivity for our customers and reduce the energy consumption. And there we find that a lot of OPEX investments, we continue to participate in last year, be it in the digitalization, energy efficiency, robotics, automation, and integration of the customer's existing plants. So we had a good traction. Now, I would like to invite Madhav to make a quick comment about cement. Madhav, just to give a flavor, what do you see in this segment?
Good morning, everyone. The sector which is fast growing in India and also having a very challenging situation in terms of around 60 to 65% utilization, capacity utilization, is in a very peculiar situation today. The focus shifting more from productivity towards the efficiency and the overall reliability of the operation. So that opens up a very huge opportunity for ABB, where we have significant installed base in this particular sector for quite many decades. We have a leadership position in terms of control systems, drives, analyzers, instrumentation, motors, switchgear, you name it, everything that what matters for Indian cement industry, which also includes captive generation of the power. So of late, we have been focusing extensively in terms of engaging our existing install base and also the new greenfield projects in terms of leveraging the control systems and the automation that we already have provided by taking it to the next level in terms of digitalization. The focus is to use the existing assets to deliver more in terms of efficient operation, reduce power consumption, improve productivity, and consistent operation for the kiln and other critical components of the cement process. Same as with the boilers and turbines of the power generation equipment and the assets in the cement plants. We have been very pleased to say that we have the first success in terms of having a major engagement with one of the leading cement producers in India in terms of digitalization, focusing mainly on the energy efficiency, on the productivity improvement, reliability of the assets by having the leading indicators and the fault detection like predictive maintenance tools, and also improving the overall skill and competency of the resources that are going to manage these new generation solutions. We are working mostly on the brownfield projects today in the absence of any major investment coming in the greenfield side, and we are trying to create the preferred partner status through our holistic offerings and the entire value chain focus. The collaborative approach is definitely the differentiator, and this is something which is going to create a significant value proposition for our customers. Looking forward for partnering. Thanks.
Thanks. I think just as the paucity of time, we'll just quickly give it so that we can allow the question and answer and Sridhar to make a commentary. So what we have, just to give a very quick data, on the robotics side, we had seen 28% growth in automation revenue, robotics automation revenue. We had in the oil and gas sector, we had 54% more orders. And in mining and metals, last year we had 60% more orders. And in the transportation and infrastructure, we see there is a big change of tactics by railways, how they give very large contracts to get the rapid electrification done, and I think that is opening up a good market for us. Same way on the airports, a lot of building automation opportunities. Metro railways, I think we have good opportunities and good play there, and also in the smart cities and port development, because there is overall development. So these are the segments which we are focused on. So we feel positive going forward, and we are quite happy as the management team of how it panned out for us for 2017. Thank you very much.
Thank you. Thank you, Sanjeev. So I'll just spend next another 10 minutes on giving you some dissection of the numbers. I think it's which you guys are waiting for. Right, so the orders for the year was, we closed at 9,490 crores, right, compared to like-to-like numbers of 8,000 crores of last year, which excludes the one-time large orders of HVDC and Alstom Transportation, amounting to 4,467 crores. Right. So if you look at the order diamond, the segment-wise order received, I think on the electrification products, we are at 2,481. On industrial automation, 1,525 crores. Right. Power grids, 3,706 crores, and robotics and motion is 1,980 crores. So I could see that we have grown substantially in all the divisions, right? So if we take off the one-off orders, which we always say that mega order. So and when it comes to the exports for this particular year, I think has been one of the hallmark years for us. We are almost 20% of our orders are now comprising of exports on a higher order base, right? And service remains strong at 14% of our orders remaining coming from the service stream. right? And when it comes to the revenues, I think the revenues also was very strong from the exports. We were at 15% of revenues coming from exports, and as well as in the services, we had 13% of our revenues coming from service business lines. So overall, I think it was a good mix of exports and service, and also each of the divisions complementing on the growth. So, and I could see if you look at the Q4 numbers, I think revenue pickup after a dull Q3 because of GST implementation was seen, and so we grew on about more than 11% on the revenues for the quarter, right? And as we follow the cash over revenues, I think we have again a very strong cash performance, right? Good recovery of overdues was one of the key elements of this particular year and the quarter. And so net, so we have with a strong cost focus, we now have a lighter P&L and a strong balance sheet to go ahead for the next few years to come. So, I mean, you could have seen from the balance sheet, so we have our DSOs have come down, net working capital has improved substantially, right? And now inventories have slightly gone up. That's basically because we have our RP800 revenues coming up in the next couple of years, and we are in the process of manufacturing for delivery to these particular projects. So overall, I think it was a very commendable and a credible year of 2017. Just diving down still further into the P&L, our material costs remain robust, remain stable, I would say, at 64.8% for the year, that again 65% last year. And also our personal expenses at 796 crores versus 750 crores of last year, and this is more due to the annual increments which we give every year. And but whereas if you look at the productivity per person, it has definitely increased by more than 15%. So that's an important criteria to note. And our other expenses have also remained stable with 18.3%. And due to working capital initiatives and a strong cash position, our interest costs have come down from 92 crores to 77 crores for the year. So finally, we posted a PAT of 4.6% against 4.3% of last year. So even our ETR, the effective tax rate, has also seen an improvement compared to the previous year. So while we see this, also we should note that last year we had we were doing our footprint rationalization, and as an initiative towards that, last year's income had an impact of almost 30 crores coming out from our footprint initiatives, where we sold some of our assets which were not required. It was one-time impact, and also we had an embedded derivative gains which was there in the last year because we moved into Ind AS from 2017, so which requires embedded derivatives to be taken in our results. So overall, I think all the divisions across the company put up a decent performance in a very transforming year when it comes to the market standpoint. So I could now close my dialogue, so I think we can now open up for Q&A.
Sure, thank you very much. We will now begin with the question and answer session. Participants who wish to ask questions may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Also, before we begin, we'd like to inform participants that in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. We take the first question from the line of Renu Baid from IIFL. Please go ahead.
Yeah, hi, good morning, sir.
Morning, Renu.
Yeah. So first question is, there has been a lot of focus on digitalization. Can we throw some light with respect to what proportion of our business today is coming through these initiatives directly, indirectly, and how large can this be in our portfolio overall?
Yeah, Sanjeev here.
Yeah.
So you can see as far as the digitalization opportunities are concerned, if you really isolate it from the main business, you should see is more like a startup in the large company, wherein what you have here is you are trying to create a totally out-of-the-box thinking to bring high level of productivity and energy efficiencies to our customers so that their future cost and future viability of their operation is assured, and also there's a high reliability and predictability in their operation. So I would say you should see that part and you should track it as more like a startup within our company. And the advantage we have is that we have a very solid base of know-how of technology and installed base. So we are starting this startup on top of that base that we have created over a period of time. So I would say we will give it some few quarters and maybe a year before we start talking about substantial number, but this is a more of a leverage that we have going forward in future.
Sure. So second question would be, overall with respect to comments, you were fairly optimistic on pickup coming through metal, cement, as well as oil and gas space. Even industrial automation margins have seen a reasonably good uptake along with revenues. So can you already share a bit more on the end markets outlook? Are we seeing the order pipeline for the coming year improving? And the green shoots on capex on which we have been speaking about for the last couple of quarters, are we seeing them strengthening further? And along with this, if you can share, how has been the mix of industrial-driven, core industrial-driven sectors in our business and backlog versus the previous year? Thank you.
Okay, so I'll take the first part, and maybe Sridhar, if you have some data to substantiate it.
Sure.
So you see, as far as there are two sides of how you run the business. One is what is happening in the macro side of economy, wherein which other sectors they are being invested, and plus how you operate yourself as a company participating in these sectors, whether they are growing or not. So I think there are both sides of it. One is that there are kind of a certain sub-segments which are growing and we are participating and taking benefit of it. And then there are segments which are not growing, but our market shares are not 100% there. So we have a good chance to penetrate, innovate, and expand in those. So we are playing with those two strategies. So when you see growth in industrials or utilities, it is not only coming because of the expansion of the market, it is more of higher penetration and more expansion for us into the same customer base because of the specific efforts and initiatives that we are making. So you can say it's a 50-50% effect of the market segment changing their tack in terms of growth, and 50% you can say is because how we push ourselves out as a company into those segments.
And to continue to what Sanjeev was saying, definitely we see that the core industries like metals and steel intermediates are still under stress, but whereas the growth is coming more from oil refining, railways, the food and beverages, aluminium, right, mining, and these are the areas where we see definitely the growth shoots coming up, and that's helping the IA industrial automation as well as the RM to quite an extent.
Okay. All right, sir. Thank you. I'll get back in the queue.
Thank you.
Thank you very much. The next question is from the line of Sujit Jain from HDFC Securities. Please go ahead.
Good morning, gentlemen. Sir, like GE has got their own IP platform in IoT or digitalization. Does ABB globally has got its own IP platform? GE's platform, for example, is like Predix.
Well, thanks for this question. Yes, ABB platform is called ABB Ability. And this is a platform which is, unlike some of our competitors, is not a proprietary one. It is an open platform wherein we will have our customers, they can co-create solutions on it. And also later on, as the space in the cloud computing improves, we will be able to connect the different applications sitting in the cloud to bring more benefit to the customer. So ABB Ability is ABB's digitalization platform globally.
So a corollary to the question would be what kind of eventual contribution to revenues and what kind of margins you can expect? Would it be substantially higher than the current margins in industrial automation business?
Well, definitely that's what we hope for. And what we find is most of the time the remuneration or the value that you create in a company is a reflection of value you create for your customers. So we believe that as far as digitalization opportunities is concerned, it will create much more value compared to what the traditional portfolio delivers. So that's exactly, you can take a reflection. Yes, more value you create for the customer, more value you bring inside the company.
So could it be 14-15% kind of range of margins in this business?
We don't give those indicators, so because that's an integral part of our offerings to the customer. So we give that as a package to him.
Okay, and one last question is what kind of growth rates we expect in services, solar, exports, and of course digitalization?
Okay.
Okay, as far as services are concerned, as I said that we have a very solid install base in the country. So despite all efforts, our penetration rate in that services sector can improve a lot. So I think our focus is to really have the focus on penetrating the install base we have so that we can continue to serve those customers with the retrofits, upgrade, and also replacing the old technologies with the new. So that's where the opportunity lies. So it will be safe to say that looking for double-digit growth in the service sector. Which was the other one?
And the exports as well. And
also exports. I think we have a good traction there. And I think the export story, at least to my team, it tells we have a solid kind of export increase this year. And our story is just starting.
And one last question, if I may just squeeze in, is EESL tender for EV chargers. What is the status there and what is the size of opportunity that we are looking at eventually in India over, let's say, a 5 to 10 year period?
Well, EESL is a government reflection of kick-starting the EV charging, EV revolution in the country, and they are buying the cars by tender and they are buying the corresponding chargers. So right now the cars that they are buying as well as the chargers they are buying, they are the low voltage solutions. We believe that the market actually will be played out in future in the more fast charging space, and that space hasn't opened yet. So I think the current technology that is being asked for, we believe it may last for maybe 2 years or 2.5 years. That will not form the basis of it. We believe that it will be the fast charging networks that will play in this market, and that's where the best of the global car manufacturers have standardized on, and that part of the market has yet to kick in. But it will take time for this segment to grow. I would say give it 2 to 5 years, wherein this will start playing the significant play in the marketplace. And our projection, if you really look at for the segment, 2030, it will not be 100% EV. At best, we will have 40% EV and 60% continue to be the IC engines in the market. So you can see the projection of the auto industry and you can correspondingly convert the numbers.
Thank you. Before we take the next question, we'd like to remind participants that in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. We take the next question from the line of Abhishek Puri from Deutsche Bank. Please go ahead.
Yeah, morning, sir. Thank you for the opportunity. Continuing from the previous question, if you can give us a little bit more detail on the exports market where you are growing, because the competitors don't seem to suggest such a big growth, whereas your growth has been quite phenomenal. So if you can give us which products specifically are we doing more indigenization for the group, or the export is going to the group or to the direct customers. And secondly, on the solar business, if you can give us what is the proportion of the business right now?
All right. So first on the exports, well, it is true that India has a very solid footprint to serve Indian market. I think that's our prime focus. and then having created this base not only for manufacturing, I think we are perhaps the best-in-class example of a multinational company doing Make in India program over last 60 years, and we continue to bring the best of technology and localize it. And then it becomes very natural, given the engineering know-how, the project management know-how, as well as manufacturing know-how that we have, that we get connected to the nearby regional markets, whether it's on the African side or in the Southeast Asia side. So our focus remains the same, Abhishek. It remains on the utilities, industries, transportation and infrastructure. And let me tell you, in all these areas, we had very solid examples last year. We supplied quite a bit in the utility side in neighboring countries as well as nearby countries in the region. Same thing we did for industries with the products as well as the solutions that go for industrial automation, or be it motors or whatnot. And then on the transportation and infrastructure, I cannot name the country, but we are also going to have a good electrification solution for the metro of a significant sized country within our region, wherein we are supplying the solution. So it's playing out like we play out in India, it's playing out into export market as well. And the second question was about?
The solar, sir.
The solar market, I think we continue to see expansion there. And we continue to expand our capacities, so much so that given the expertise, the manufacturing as well as delivery expertise we have, we are not only looking into India, we are also now are exposed by the ABB group into the regional as well as the far regional market. So you will see that India contributing not only to Indian solar market, but a lot of market is opening up in the Middle East, Southeast Asia to an extent, and even in the Americas. And India would be a strong contributor into that growth for the group.
So my second question is on some clarification on the results as well. Two things. One, on the order book that you have mentioned, 115 billion or 11,340 crores. If I take the last quarter order book of 12,120 crores and I take the order inflows, has there been some cancellation of orders? Because your inflows are more than revenues, yet your order book has declined by almost 600 crores on a sequential basis. That is first clarification. And second clarification is on the operational EBITDA numbers that you give. For Q4 2016, you have shown 250 crores operational EBITDA in the current press release, whereas when I go to the last year, Q4 2016 press release has operational EBITDA as 281 crores. So where is the difference of about 31 crores in the numbers there, sir?
Very good. I think, thank you for this question, so the CFO can answer this. Okay. The first thing is about your order book. And the GST as a subject is more about tax adjustments to the contract values. So there has been definitely an adjustment to the contract values between the contracts what we had order book which you had already shown and what it is today, because today it is more vatable, whereas in earlier case it was more of grossing up. So and when we have large contracts like RP 800 and the other frame agreement, the Alstom contract and the project contract, so naturally you find that impact in the order backlog, right? So that's one of the key drivers for why the order backlog is not so, you find the gap there. And that you will find it in every other EPC companies, because they would have definitely adjusted to this particular extent. And next, coming to your question of operational EBITDA, right? So why, but there's a difference. In 2016, the company was reporting the numbers under the earlier Indian GAAP. And today the company, from 2017 onwards, the company is reporting under Ind AS. So the translation from Ind GAAP to Ind AS has some adjustments, which was also seamlessly driven on the operational EBITDA as well.
Thank you, and all the very best, sir.
Thank you.
Thank you. The next question is from the line of Deepak Agarwal from Elara Capital. Please go ahead.
Yeah, my first question is, if I heard correctly in the opening remarks, you mentioned exports is about exports and services has grown each by 15% and 13% respectively. Can you is this a number as a percentage of revenue as well, if you can share? or is just a YY growth?
Actually, what I mentioned was exports. Exports was 15% of the total revenues, what we have delivered, right? And service was 13% of the total revenues, right? So, as we were mentioning earlier, exports, both in orders and revenues, have been a solid contributor to this year's performance. So then there we said that we are growing by double digit.
Okay, thanks for this clarification. And also, usually renewables are around 17 to 18% also of your top line. So is that the number almost the same at the close of CY 17?
No, renewables are not at 17-18%. Renewables are around about 8 to 10%, and it's the same.
Okay.
Also, including rail, yes.
Excluding wind.
No, including wind and solar, that's 8 to 10%, what I said. And if you look at other focus sectors like rail, then it's yes.
Okay, so including rail, it will be around 17 to 18%.
Yeah, you're right.
Okay. And also one clarification on the balance sheet size. If I see there is a very sizable jump in the trade payables and other current liabilities. So I assume the debt of 600 crores is going as a current portion of long-term maturity because the debentures are due in September 18.
No, that is part of the loans, right? So let me tell you. So with the implementation of GST, unlike what it was in the other regime, so the GST assets and liabilities have to be separately reported. So there is no netting of process in this. So that's why you could see your non-trade receivables and your other payables going up by simultaneously the same amounts.
Thank you. The next question is from the line of Bhavin Vitlani from Axis Capital. Please go ahead.
Yeah, at the outset, we'd like to thank for a comprehensive review of the company and the future by Sanjeev and the team. If you can help us, what we understand is digitalization or automation as a total segment is about $1.5 to $2 billion in the market size. And if you add up ABB's, every part is about 4,500 crores. How do we see this market on a 5-year basis? How large can this grow? Do you believe that the growth in this market will be now a multiplier of maybe 2x plus of the growth in the industry? That's my first question.
Yeah, Subir, if you are there on the call, can you basically throw some light on Bhavin's this thing, please? Raymond, can you unmute Mr. Subir Pal's number?
Yeah, Subir here. Am I audible?
Yes, Subir.
Yeah, this automation growth in terms of digitalization, certainly it has cascading potential on the core businesses itself. So automation and digital technologies are a key differentiator in the market. So as we make all our core assets more and more intelligent and our customers do the same, so it is going to be almost exponential dimension which can take place on the automation side. It would not be prudent to speculate exactly how much, but there is a scope for tremendous growth on that side.
My second and last question is on the robotics. You mentioned significant growth in the robotics. If you could share the growth number and how large is robotics as a percentage of the total business of ABB India?
On the robotics side, I would like to give you an indication that in the previous year, let's say in 2016, the robots we sold were about 300, and this year in 2017 we sold more than 550 robots. So that would be an indication of the kind of growth that this sector has seen and the market share growth that ABB has taken in that market. So that's on the robotics side, because automotive sector is doing reasonably well and they are automating their plants very aggressively. So that opens up a great opportunity for us in robotics. And currently, it is not a very high percentage of the revenue, but it has a potential to be, because when we compare it with China, China is almost 20 times the market, and India is also catching up on industrialization phase. So it has a great potential.
Yep. Thank you so much.
Thank you very much. Due to time constraints, we'll be able to take one last question. Last question is from the line of Charanjit Singh from B&K Securities. Please go ahead.
Hello, sir. Hello, sir. Thanks for the opportunity. So actually, I would like to understand, you had talked about, cement and metal sector, some capex pickup happening. So one is like, if you could help us understand how large could this prospect pipeline be, and when do you see that the meaningful orders can start to finalize? And the other aspect would be also on the railway segment. We are, we have talked about railways being maybe 5% of our revenues currently, and our target was to take it up to around 15%. Do you think that could be achieved now in next 1 or 2 years, or it will take further longer? Hello?
Yeah. So first question was?
First question on the metals and the cement sector.
Yeah, so I think cement sector definitely has a higher traction than steel or metals. But we do find that our play with these players or the customers stay continuous, because we play on both OPEX and CAPEX cycle. So we have seen more action on the OPEX cycle, wherein people are upgrading their infrastructure and the existing plants, upgrading to the technologies which can give them higher productivity. And now we are also starting seeing the green shoots in the cement side on the new project pipeline. But the steel, again, on the planning board, there are many more. So I think going forward in 1.5 years' time, I think we will have a robust converting pipeline in this area. That's what our view at the moment.
Yeah.
Thank you. And on the railway front?
On the railway side, I think as we mentioned in our brief, the railways contracting methodology is changing in terms of accelerating the project, and I think that's a very welcome change. Instead of having small procurement and to diversify tenders, now they're consolidating it. Just to give you an example, they will have for 1,000 kilometers, they will have one EPC doing the electrification rather than have multiple of them doing 10 kilometer each or 100 kilometer each. So that consolidation of EPCs also brings to a sweet spot of ABB, because we can help our EPC customers de-risk their portfolio and execution cycle, and I believe that's how we will benefit from it. And also on the on the railway engines, as well as the new generation kind of passenger cars that are coming in, we will see a good traction there. So if you really break down the outlay provided by railway, and as they will spend it into electrification of tracks on the engines, building more of them to run on the electrification tracks, and also then correspondingly most modern, more comfortable passenger cars. So I think if you spread that spend of railway over a period of time, you see a corresponding pickup in ABB exposure and portfolio as well.
Yeah. So, Charanjit, just to add to what Sanjeev was saying, here what we are talking of is more of the product and the systems what we will provide to railways, and we are not at this point of time looking at large system orders on the metro side of it.
Mm-hmm. Okay. Yeah. Great, sir. Thanks a lot for taking my questions. All the best for the future.
Thank you very much.
You want to take more?
So I think we can squeeze in one more question, if it is possible. Yeah.
Sure, we'll be able to take one more. The next question is from the line of Madan Gopal from Sundaram Mutual Fund. Please go ahead.
Good morning, sir. I just wanted a clarification. Exports, you said, is 25% of orders right now, order inflow or the order book? I just wanted a clarification.
Okay, so 20% of our orders is coming from exports for this year, and last year was 15%.
Order inflow.
Order inflow.
Yeah. Thank you.
Thank you.
Thank you very much. We'll take that as the last question. I would now like to hand the conference back to Mr. T.K. Sridhar for closing comments.
Yeah, thank you. Thank you very much for joining this call to take you through the full year results of 2017. Right, I think it was as we were mentioning on the call, 2017 was a very interesting year, right, and where we were able to give a very solid and then rounded performance. And we look forward to taking it forward in 2018 as well. So thanks to the entire team who could arrange it, who could make this possible. And also, in case if there are any unanswered questions, please feel free to come back to me or Manashvi, right, and we will come back. We will reply to you at the earliest. Thank you very much.
Thank you. On behalf of ABB India Ltd, that concludes this conference. Thank you for joining us, ladies and gentlemen. You may now disconnect your lines.